Hello everyone, Keith here, and in this video, I'm going to answer the big question that lots of homeowners and home buyers are asking. When is the market going to crash? But first, I'll explain what is happening with the housing market, and towards the end of this video, I'll give you my answer. At the start of this month, a whopping 42% of homes were selling for more than their list price. According to the real estate brokerage Redfin, this was 16 percent points higher than the same period a year ago. Frantic buyers are forced to pay more than the asking price, sometimes by $100,000 or more, and removing lots of important contingencies. The housing market has been white hot for the past year thanks to the stay-at-home and work-from-anywhere culture of the coronavirus pandemic, and an all-time low interest rates that have brought lots of new first-time home buyers to the real estate market. But there is an increasing concern among the public that the housing market is experiencing a price bubble and that bubble may be ready to burst. Google reported last week that the search question, "When is the housing market going to crash?" had spiked 2,450% in the past month. "Why is the market so hot?" search had doubled in just a week. And in the most telling indication that the market may be in a bubble, "How much over asking price should I offer on a home 2021?" jumped 350% in the Google search in that same week. There are various measures of home prices, but one of the most timely and watched is from CoreLogic, which showed prices up 10.4% in February year over year. That is the largest annual jump since 2006. And just this past week, the National Association of Realtors said last month that prices of existing homes soared a record 17% from March 2020 to March 2021, a pace that eclipses even the eye-popping appreciation of the last boom. All right, would you please do me a favor? If you've watched this video for this long, would you please hit that like button? It would mean the world to me and help this video move up on the YouTube search results. Thank you. Now, the last time the U.S. housing market looked this crazy was back in 2005 to 2007. Then the home values crashed with disastrous consequences. When the real estate bubble burst, the global economy plunged into the deepest recession since the Great Depression. We've got a huge shortage of housing supply on the market for sale. At the same time that record low mortgage rates are driving the appetite to buy for millennials and Generation Xers. According to Realtor.com, there are about half as many homes actively listed for sale compared with the same time a year ago. This has caused competition to ignite to the point where buyers are more likely to find themselves in a bidding war. The housing market is more competitive than we've ever seen it, but a couple indicators are causing us to ask whether we're nearing a peak in terms of how fast demand and prices can grow. Sellers' asking prices may be starting to flatten what so far appears to be a typical seasonal pattern. The decline in mortgage purchase applications could be a sign that some people are dropping out of the market because there's a lack of affordable homes for sale. As mortgage rates rise, which they are slowly doing now, and buyers hit an affordability wall, experts expect to see annual home price gains nationally cool to the 3% range. But all real estate is local. That does not mean there will be some markets that are not going to have any price growth at all. Nearly 75% of the 100 largest U.S. housing markets saw annual home price growth of 10% or higher. Markets with the strongest price appreciation could be more at risk. Nearly 75% of the 100 largest U.S. housing markets saw annual home price growth of 10% or higher. Markets with the strongest price appreciation could be more at risk. Now, many of those cities are in the West, where Californians have flocked during the recent exodus. Those include Boise City, Idaho, where prices went up 26% annually, Washington 20%, Ogden, Utah 20%, and Phoenix 18%. Home builders are slowly increasing production, and new government COVID stimulus could add to that. As the economy opens and more Americans are vaccinated, cities could see a rebirth, taking some of the heat off of the suburban competition. So, will the housing market crash? I believe it's unlikely. The foundations of this housing market look far more stable than those of 15 years ago. The supply of homes for sale has fallen to an all-time low, and borrowers are more creditworthy than ever. In my opinion, the housing market is unlikely to crash. However, it is very likely to cool, no question. But unlike the great housing crash a decade ago, mortgage underwriting is very strict now, so the homeowners can afford the homes that they're currently in. If prices chill or drop even slightly in some markets, it will not lead to a foreclosure crisis. Investors are quite heavy in the market as well, giving the high demand of rentals, and that should serve as a backstop for major price declines. Let me know in the comments if you agree with me or not. I'd love to hear your side. Also, the next video is right here in the corner of the screen. Click on it and watch the next video. Thank you, and we'll see you next time.